Okay, ready for another deep dive?
Always.
This one is, this one's pretty big one.
Yeah.
It looks like
A lot of material.
we got articles, we got notes, we even have, I think I see some like dog-eared pages from an actual book in here.
Wow, somebody's been doing their research.
Oh yeah, it seems like you're interested in pretty well everything personal finance.
Yeah, from like the very basic stuff like budgeting all the way to
Retirement?
investing.
Even some stuff about the psychology of money.
Yeah, pretty fascinating stuff.
Yeah. So this is going to be a fun one.
Looking forward to it.
So what do we want to do? I think we should start, I mean, like always, we should start with the very basics.
Okay, build that solid foundation.
Yeah, building blocks.
Yeah,
I noticed that you have like a lot highlighted about budgeting and money management.
right.
And that's always a good place to start, I think.
Yeah. And there are so many different approaches to budgeting now.
Yeah, I mean, there's that classic one like needs versus wants.
Right.
But then I also see in here stuff about like the 50-30-20 budget.
Yeah, where you allocate 50% of your after-tax income to needs, 30% to wants, and 20% to savings and debt repayment.
Yeah, and then there's also this one, zero-based budgeting.
Right, that one seems to be pretty popular.
Yeah, that was a little more intense, I think.
Yeah, you're allocating every dollar.
You got to like account for every single dollar you bring in.
Every single one.
But I think that, I mean, it's a lot more work, but I think it can be really powerful.
If you're really looking to get a handle on your spending.
Yeah, like really dial in on where your money's going.
Right.
So we should probably talk about budgeting apps too, right?
Oh, yeah, absolutely. Because
it's like no one wants to sit there with a spreadsheet anymore.
Nobody wants to do that, yeah.
There are so many cool apps out there that can like connect to your bank accounts.
Categorize your transactions.
Sure.
Track your progress. Even send you alerts when you're approaching spending limits.
Yeah, that's really helpful.
Yeah.
Oh, and the one thing I noticed in here is a little note about rewarding yourself.
Oh, yeah.
I think that's important. Like budgeting doesn't have to be this horrible,
And it's a miserable thing.
restrictive thing. Yeah.
Yeah, it's okay to build in some rewards for yourself.
Yeah, you got to celebrate those small wins,
Well,
right?
absolutely. It makes the whole process more sustainable.
Okay, so we talked about budgeting and money management. I think it's time to move on to investing.
All right, let's dive into the world of investing.
Yeah, I see here a lot of stuff about diversification, asset allocation.
Right, spreading your investments across different asset classes. So
Yeah.
you're not putting all your eggs in one basket.
Which is very important
It is.
because you never know what's going to happen with the market.
Exactly. It helps reduce your risk.
Yeah. So what are some of the asset classes that people should be thinking about?
Well, you've got your stocks, of course.
Yeah, stocks, bonds,
Bonds, yeah.
real estate.
Real estate. We'll get to that one later.
Yeah, we'll dig into that one. Commodities, gold, things like that.
Exactly. Even things like cryptocurrencies.
Yeah, crypto. Okay, so this is a whole world in and of itself.
Yes.
We could do a whole separate deep dive just on different types of investments.
Absolutely. We could spend hours on that.
But I think the main takeaway is diversification.
Right. Don't put all your eggs in one basket.
Don't put all your eggs in one basket.
Spread it out. Reduce your risk.
Okay, and then you mentioned retirement planning before. That's a big one.
Yeah, and you flagged a lot of stuff about 401ks and IRAs.
Yeah, because it's like something that a lot of people, they kind of put it off.
Till later.
It's like, yeah, I'll worry about that when I'm like 50.
But it's really important to start early.
Oh, yeah, like as early as possible.
As early as possible.
Even if it's just like a small amount.
Yeah, even $25 a week.
Yeah, because it all adds up.
Especially with the magic of compound interest.
Compound interest, that's the key.
It's like your money's earning interest on interest.
It's like a snowball rolling downhill.
Yeah, it just keeps getting bigger and bigger.
Okay, so we talked about starting early, but what about employer matching?
Oh, yeah, that's a big one.
That's something that a lot of people don't take advantage of.
You got to take advantage of that. It's basically free money.
It is.
If your employer offers a match, you want to contribute at least enough to get that full match.
Yeah, maximize that.
Absolutely.
Okay, so we talked about budgeting, investing, retirement planning. What's next? Oh, taxes.
Yeah, the dreaded taxes.
No one likes talking about
Yes,
taxes.
nobody, but it's important.
But it's super important, yeah.
And you've highlighted some interesting stuff here
I have.
about tax planning and optimization.
Yeah, because it's not just about paying your taxes. It's about being smart about it.
Right, about minimizing your tax liability.
Yeah, legally.
Legally, of course, there are a lot of strategies you can use.
Yeah, there's deductions, credits, all sorts of things.
And you've highlighted some specific ones here that might be relevant to your situation.
Yeah, I've been doing my research.
I can tell.
So it's important to stay up to date on the tax laws because they're always changing.
Always changing, always evolving.
So I think a good tip is to maybe talk to a tax professional, especially if you have a complicated financial situation.
Absolutely, they can help you navigate all the complexities and make sure you're taking advantage of every opportunity.
Okay, now this is a little bit of a shift, but you also included some stuff about financial markets and economic trends.
Right. It's important to have a broader understanding of what's happening in the world.
Yeah, because it all affects your personal finances,
It does.
like things like inflation,
Interest rates,
yeah, interest rates,
recessions, even geopolitical events. All of these things can impact your investments, your savings.
even your budgeting.
It all ties together.
Yeah, so it's not just about like looking at your own little bubble. It's about understanding the bigger picture.
Right. Seeing how everything is interconnected.
Okay, so we've talked about a lot of positive stuff, but we also need to talk about the not so fun stuff. Debt,
Yeah, debt is something that a lot of people struggle with.
for sure.
But the good news is there are strategies for managing it effectively.
Yeah, I see you've got a lot of stuff highlighted here about debt management, about credit scores.
Yeah, your credit score is so important these days.
It affects everything,
It does, from getting a loan to renting an apartment,
even getting a job sometimes.
then getting a job. Yeah, it's crazy.
So what are some of the basic things people should know about debt management?
Well, first of all, you need to understand the different types of debt.
Okay, so like good debt versus bad debt.
Right, things like student loans and mortgages are generally considered good debt.
Because they're investments in your future.
Right, whereas things like credit card debt are generally considered bad debt.
Because the interest rates are usually very high,
Yeah, very high.
and they can really trap you.
They can.
So what are some strategies for paying off debt?
Well, there are a few different approaches. You've got the snowball method, where you focus on paying off your smallest debts first to gain momentum.
Okay, yeah, I like that one. It's very psychological.
Is
Makes you feel like you're making progress.
Yeah.
Then you got the avalanche method, where you focus on paying off the debts with the highest interest rates first.
Right, to save money on interest charges.
Yeah, that one makes more mathematical sense.
It does.
But whatever method you choose, the key is to just be consistent.
Right, create a plan and stick to it.
Okay, so we talked about the basics of personal finance, budgeting, investing, retirement planning, taxes, debt management.
We covered a lot of ground.
But now it's time to get into some more niche topics, I guess you could say.
All right, let's explore.
So the first one, and this is one that you seem really interested in based on everything you've highlighted, real estate investing.
Oh, yeah. Real estate can be a powerful wealth-building tool,
It can.
and there are so many different ways to invest in real estate.
Yeah, I mean, we talked about owning your primary residence, but that's just like the tip of the iceberg.
Right, you can invest in rental properties, you can flip houses, you can even invest in real estate crowdfunding platforms.
Yeah, crowdfunding, that's a newer one.
Yeah, it's a relatively new way to get involved in real estate investing.
But it's pretty cool. You can invest in like a fraction of a property.
Yeah, it lowers the barrier to entry.
So real estate investing can be very rewarding, but it's also very risky.
It is. You need to do your research, understand the market.
Yeah, and have a solid financial plan in place.
Absolutely.
Okay, now this next one is a big one. The FIRE movement.
FIRE, financial independence, retire early.
Yeah, it's a whole movement.
It is.
Like a whole philosophy of life almost.
Yeah, it's all about aggressively saving, investing for the long term.
And reaching financial independence so you can retire early.
Right, or at least have the option to retire early.
So it's not necessarily about like never working again.
It's about having the freedom and flexibility to do what you want with your time.
Yeah, I like that.
It's appealing to a lot of people.
But it is a very intense approach.
Yeah. It is. It requires a lot of discipline, sacrifice.
You got to be very frugal. You've
Right.
got to be very good at saving your money.
You got to be willing to live a more minimalist lifestyle.
Yeah, it's not for everyone.
It's not, but it's definitely an interesting concept to explore.
Okay, so real estate investing, FIRE movement. What else do we have here? Oh, fintech.
Fintech, the intersection of finance and technology.
Yeah, this is a rapidly growing field
It is. It's changing the way we manage our money.
in so many ways.
Yeah, we've already talked about budgeting apps, but there's so much more.
There's robo-advisors.
Online lending platforms,
Yeah.
even cryptocurrency exchanges. All of these are examples of fintech.
Yeah, and it's making financial services more accessible.
More convenient,
Yeah, and more affordable.
for sure.
So it's a really exciting space to watch.
It is. It's constantly evolving.
Okay, so we're getting to the end of our deep dive here, but there are a couple more important topics we need to touch on.
All right, let's wrap things up.
So first of all, estate planning.
Yeah, nobody likes to think about this.
No, but it's important.
It is. It's about planning for the future, not just for yourself, but for your loved ones.
Yeah, it's about making sure your assets are distributed according to your wishes.
and minimizing potential tax burdens for your heirs.
So estate planning can involve things like wills, trusts, powers of attorney.
All important documents.
Yeah, and it's a good idea to talk to an estate planning attorney.
To make sure you have everything in order.
Okay, and then the last topic, impact investing.
Oh, this is a good one.
This is a really cool one, yeah.
It's about investing in companies and organizations that are making a positive impact on the world.
Yeah, so it's not just about financial returns, it's about social and environmental returns as well.
Right, aligning your investments with your values.
So there are a lot of different ways to do impact investing.
You can invest in specific funds, you can invest directly in companies.
Yeah, and there are a lot of resources available to help you find impact investing opportunities.
Absolutely, it's a growing field.
Okay, so we covered a ton of information today.
We did a deep dive for sure.
But there's one last thing I want to talk about, the psychology of money.
Oh, yeah, this is fascinating stuff.
This is where things get really interesting, yeah.
Because it's not just about the numbers, it's about our relationship with money.
Yeah, and how our emotions and biases can affect our financial decisions.
Absolutely. We're not always rational when it comes to money.
No, we're human.
We're human and we make mistakes.
So understanding the psychology of money can help us make better decisions.
More informed decisions.
Yeah, and avoid those common pitfalls.
So what are some of those common pitfalls?
Well, one that you mentioned earlier is loss aversion.
Right, the tendency to feel the pain of a loss more strongly than the pleasure of an equivalent gain.
Yeah, so we might hold on to a losing investment for too long.
Or avoid taking risks altogether.
Even if those risks could lead to greater rewards.
Right.
And then there's also things like overconfidence.
Thinking we know more than we do.
Yeah. Or herd mentality.
Following the crowd.
Yeah. Which can lead to making impulsive decisions.
Not the best strategy.
So there are a lot of different psychological biases that can affect our financial decisions.
But the good news is, once we're aware of them, we can start to mitigate their impact.
Yeah, we can make more conscious, deliberate choices.
Okay, well, I think that's a good place to wrap up our deep dive.
Yeah, we've covered a lot of ground today.
From the basics to the more advanced stuff.
From budgeting to investing to the psychology of money.
I hope you found it helpful.
I know I did.
And remember, this is just the beginning.
Yeah, financial literacy is a journey.
It's not a destination.
So keep learning, keep exploring, and keep asking questions.
And if you ever have any more financial puzzles you want to unravel,
We're always here for another deep dive.
absolutely, bring it on.